Section 102 excludes gifts. And similarly, life insurance, we can say that's a type of gift. Typically, you buy life insurance to cover the expenses of your dependents should you accidentally pass. And so it's a form of intra-family gift, also excluded under the tax code. So where do I get this idea that business gifts are not really gifts? Well, here's our landmark case of Duberstein in the Supreme Court. And this is a case of business associates or business colleagues who had worked together over the years, perhaps traded favors, referred customers to each other, and at one point, Mr. Duberstein gave a Cadillac to his business associate. Pretty generous gift. And the question was whether it would be excluded from income. So this is where the Supreme Court told us that the gift that the tax code is excluding is that which proceeds from detached and disinterested generosity. And the relationship between business colleagues is not that. Now, even though the Duberstein business associates, there was no obligation, there was no contract, there was no quid pro quo in this instance. The giving of the gift in a business context relates to the production of income, the doing of business as a whole. And you can tell that because the taxpayer deducted the cost of the Cadillac. He thought it was a business expense and not just a gift. Of course, if you make a real gift out of affection within a family, you don't deduct the cost. The parent doesn't deduct the cost of the gift to the child because it's not a deductible business expense, and neither is it includable on the end of the child recipient. Detached and disinterested generosity, though that's the definition of a gift for tax purposes. Now, your Horn book carries this further in terms of the basis of the gift. Now remember, the basis is the cost or the purchase price. And depending on your basis in a gift or any other asset, that will determine the amount of gain when you ultimately sell the asset and realize the proceeds, because of course you subtract the cost that you originally put into the asset or the gift. And so your text discusses how the basis rules relating to gift bear out the concept of excludable gifts as archetypally occurring within a family.